US stocks are bouncing back. The S&P 500 and Nasdaq 100 have both attracted buyers in recent sessions, pulling both indexes off the levels that rattled investors earlier this month. The question now is whether this is a real recovery or just a brief relief rally before more pressure returns. Let's start with what we know. Both benchmarks have seen a clear pickup in buying activity. That shift in tone has caught the attention of market watchers who have been waiting for signs that the selling has run its course. What drives a move like this? A few things can pull buyers back in. Cooling inflation data can do it. So can growing expectations that the Federal Reserve has finished raising interest rates. Or it can simply be that stocks fell far enough, fast enough, that bargain hunters stepped in. Right now, it is too early to say which of those forces is doing the heavy lifting in this particular rebound. The Nasdaq 100 is worth watching closely here. That index is heavily weighted toward large technology companies, firms whose valuations are especially sensitive to interest rate expectations. When investors start to believe that rates have peaked or are heading lower, those kinds of growth stocks tend to benefit. So the Nasdaq's next moves will be closely tied to whatever economic data lands in the coming weeks, and to any signals coming from Federal Reserve officials. The S&P 500 tells a slightly different story. It is a broader measure of the US stock market, covering financials, industrials, consumer goods, and more, not just technology. For a recovery in the S&P 500 to hold, you need buying spread across those sectors, not just a surge in a handful of big tech names. In the days ahead, investors will be watching closely to see whether that participation is wide or narrow. Here is the important caveat. Short-term recoveries do not always signal something durable. Markets can bounce sharply and still fail to establish a solid floor, especially when bigger economic questions remain unanswered. And right now, plenty of those questions are still open. Upcoming data on inflation, jobs, and consumer spending will act as real tests for this rally. If those numbers disappoint, the rebound could stall quickly. So the practical thing to watch is not just whether stocks go up, it is whether gains are spreading across sectors and whether the economic data supports the move. A rally led by one corner of the market, without broad participation and without data to back it up, tends to be fragile. Width matters, context matters. Keep both in view. This briefing is brought to you by First Financial News. Clear, daily coverage of the economy and markets at firstfinancialnews.com.